I'm here with Margaret Franklin at the 2013 Morningstar Investment Conference right here in Toronto, and she just gave a great presentation on the new normal. So the new normal is really a completely different landscape for advisors and for clients. So Margaret, tell me, what does the new normal mean for investors that are watching right now?
I think the challenging thing for investors is, as I said in my speech, if most of the last 25 years has been to infinity and beyond, returns have been high, volatility has been largely muted and a little more consistent, we're on the other side of that equation right now, which is higher volatility, probably lower aggregate returns, and more correlation between assets, which means for retail investors and for professional investors that the tools you would normally use for diversification don't diversify the same way, and that has implications again for the overall portfolio volatility.
Okay, and as an investor, it is a time of deleveraging. So is there something that concerns you about that? Is there one thing that you're looking out for?
Well, I think that we're 5 years past 2008, and I think clients have a much better appreciation for the elements that go into successfully meeting their objectives. So I think they get the economic backdrop. I think they get volatility, and their expectations are much more realistic. I also think they have a much greater appreciation for things like liquidity. Having enough money sort of set aside and safe for investments that can help them get through stressful times, because the world is more volatile certainly than it has been.
Okay, so as an investor, as we're all trying to get through this time, when we go into an advisor, what are some questions that we should be asking right now?
Well, I think the first thing that that clients should really be asking is, how am I doing against my objectives? And if I were a client, I'd ask, what do you think my objectives are? Because one of the things we as professionals can do is take clients' plain language, true objectives. I want to put my kids through school, I want to retire in a certain lifestyle. We can actually figure out portfolios against those objectives, and we can actually come back to the client in a goals-based asset allocation. We tend to work, generally speaking, in mean variance space, and we're analytical people, so we do it that way. Ironically, the two come quite close together, but if your advisor can come back and tell you what the objectives are, I think that is a great starting point. And if they can't, maybe you haven't, as an individual, you haven't been clear on them, you're not clear in your head, your advisor can work away with you, and then you can start to understand the portfolio in context against those objectives.
Okay, and traditionally when you walk into an advisor, the first thing they get you to fill out is a risk questionnaire. Yeah. Since 2008, that's got a bad rap right now. So yeah. Is there a point of a risk questionnaire anymore?
Look, you have to have some documentation to do the assessment, but in my view, the best advisors they'll use that, and then they'll quickly get to what the true objectives are. They're talking to you in a language that you understand, and that may really help them shape the risk questionnaire. But I think the challenge with risk questionnaires and with risk-based asset allocation based on exclusively historical returns, correlations, and volatility is that we're in a totally different environment right now. Bonds yielding 8% are really fundamentally different than government bonds yielding 1.5%.
Okay, great. Thank you so much, Margaret.
Thanks.
To see more of Margaret's presentation or to get more coverage of the conference, just go to our website, www.morningstar.ca.